Good evening, everyone. I'm Rakhi Gautam, the moderator for the session today. I welcome you all today to our 29th expert webinar, Parichay. The topic for today is the new and old tax regimes and its impact on salaried employees. So before I dive into the topic, let's do a quick housekeeping on how the session goes. It will be divided in two parts. The first part will be the discussion with our expert, Mr. Amaranath ES, followed by the questions from the audiences. And you don't have to worry at all. This session is currently being recorded. So if you miss out on anything, we have got you covered. We'll share the recording once it is done. So now, without any further delay, let's start the session. As we all know that individual taxpayers pay the income tax based on the slab that they fall under. Depending upon the income of the individual, he or she may fall under a different or specific tax slab. Therefore, individuals with a higher income pay more tax. The slab system was introduced to maintain a fair tax system in the country. However, a new tax regime was introduced in the Union Budget 2020-21. Taxpayers are given the option to choose between the old regime and the new regime. But which tax regime is much better? Which one should we choose? Which one should you choose? What is the impact of each tax regime on the salaried employees? How are these both different? In the next 1 hour, we are going to discuss this in length with our today's expert, CA Amaranath AS, and understand the new and old tax regimes for salaried employees in detail. So before I move on to the questions, I'll just quickly give you guys a brief about our expert. Mr. Amaranath AS is a CA by profession and has around 19 years of experience in the field of NRI, HNI taxation, US tax and labor law consulting. He started his career in the International Executive Services Division of KPMG Global Services, where he worked on the US tax returns and related compliances for expert tribes. Prior to starting the firm, Mr. Amaranath worked in the Global Employer Service practice in Deloitte, Bangalore. His expertise includes various facets of global mobility, like expert tribe tax, social security, PF implications on international workers, ESOPs, immigration, assignment structuring, etc. He was an active member of the team which makes industry representations to the Ministry of External Affairs through NASCOM in matters concerning social security legislations. In his current role, he has assisted his clients on PF matters, issues relating to international workers, gratuity trust, etc. He has also advised clients on matters relating to labor codes, impact analysis, form structuring, labor law compliances arising on accounts of merger and demerger. Once again, a warm welcome to our expert for the session today. We are very happy to have you here with us today, sir.
Thank you. Thank you, Raki, for such a nice introduction.
Thank you. So we'll now move on to the questions. So my first question is, what is the rationale to introduce this new regime? We already had one. So what is it that the government seemed prompt to introduce these new regime?
Yeah. See, coming to this new regime and old regime, as you rightly pointed out, this was introduced in the budget 2020, and this is applicable from the financial year 2021 onwards. So 2 years have been passed with the new regime, and this is the third year where we are looking into this new regime of taxation. See, the basic objective during the budget session, the finance minister said that they are trying to make the laws simplification. Simplification is one of the major objective of bringing in this new regime. So she mentioned that simply with an objective of simplification and rationalization of tax provisions, we are coming up with this new tax regime. So what exactly that means? I mean, rationalization or simplification, was that required? I mean, in what way it is going to benefit employees? So when you look at the global trend as well, many countries are simplifying their tax rules. So when you look at US also, under Trump administration, they simplified the income taxes to a great extent, especially when it comes to the individual taxation. So India also is moving towards the global trend, and they are also aiming for a simple tax regime and moving all controversies and complexities wherever it is involved. So when you look at the existing tax regime, there are so many exemptions and deductions. In the new tax regime, they said that these are not applicable to the new tax regime. What is the challenge with respect to those exemptions and credits or deductions? Definitely, it is beneficial to the employee. But when you look at the process perspective, there is a lot of complexities involved. One with respect to the procedural aspect, both for employee and employer. Employer has to maintain a lot of proofs. Employees have to maintain that and submit at the year end to the employer. Employer has to keep that record for 8 years, 10 years, depending on their income levels and all that. The other thing is complexities involved in computation of those exemptions and deductions. So when you look at HRA and LTA, the provisions are very complex and very different. See, one says that the rental payment receipt has to be maintained. Other says that the travel receipts have to be maintained. In a block of 4 years, you can claim only for 2 years. And HRA says in excess of 10% of rent paid, you won't get any deductions. All these are complexities involved in computation mechanism. And the other one is there are specific limits. On top of it, on these administration hassles, I maintain everything. But at the year end, when I look at my tax computation, HRA exemption, when you see, it could be zero as well. So what is the point in maintaining all the receipts, all those, all the through the year and going through such practical hassles and finally not getting any exemption? So these are the challenges with respect to the existing tax regime. So they introduced this new tax regime with an objective of simplification and rationalization of tax provisions. So if an employee, if he does not want to maintain any bills or does not want to claim any deductions or does not want to undergo such practical difficulty, he can straight away say that I don't want to claim any of those, but I want to claim a new slab benefit. Under new regime, I will come and I will, make my life simple. So the basic objective is simplification and rationalization of these tax provisions.
Sure. So as Mr. Amaranath, you mentioned that there were a lot of challenges with our old tax regime. And you mentioned that, there was a lot of computation involved, which made it, challenging for both the employees as well as the employers to handle that and to have that seamless process through. So, and you mentioned that this new tax regime was introduced to make things simpler. So in what way was it simplified? Are there any changes in the tax rates? What are the slab rates under the new tax regime?
Great. A very good question, Raki. For this, just to, explain this, I think it would be better if I explain it. If I share the slide so that I can draw a comparison between the existing regime and also the new regime, and I can explain the slab rates.
Yeah, please.
I hope the slides are visible, right? Yeah. See, when you look at the slab rates, old regime is the first one, and the new regime I have given both the slab rates. Under old regime, when you look at both the slab rates, what you can draw the inference which could be drawn is up to 5 lakhs, there is no change. 5% is the tax under new regime as well as old regime. And when it comes to 30% taxation under old regime, if it exceeds 10 lakhs, the income is taxable at 30%. However, under new regime, if the income exceeds 15 lakhs, it is taxable at 30%. So the difference of 5 lakhs, which is between 10 and 15, under the new regime, it is taxed at a lower rate. Similarly, the 5 to 10 under old regime, it is taxed at a straight rate of 20%, whereas under new regime, it is taxable at 10% and 15%. So when you look at net, what is the effect? For the moment, we will forget about all deductions and exemptions. And we will see that 15 lakhs is the salary of the taxable income of the employee. So if you compute under old regime, what is the taxes? And if you compute under new regime, what would be the tax liability? Under new regime, it would be 1,62,500, whereas under old regime, it will be 2,57,500. So there is a net impact of 75,000 rupees, which can be saved under new regime. So can we conclude that, anyway, new regime is beneficial, though slab rates are progressive and lenient slab rates are there under new regime? Can we conclude that everyone new regime is beneficial? Definitely no, because this new regime comes with a price. So what is the price you are going to pay for this new regime is you have to forego most of the exemptions and deductions applicable in case of a salaried employee. So by considering only the slab rates, the new regime may look to be beneficial, but when you work out actually, then only you will get to know what is the impact of this new regime and old regime. So one cannot conclude just by looking at the slab rates.
Right, right. So since you mentioned that there are a lot of deductions and exemptions that will be foregone if we choose new tax regime, can you throw light on that? It will help us understand better what are those deductions and exemptions, and why it is better if we maybe choose old regime over new regime,
Great.
even with
Yeah,
such a the difference between tax rates and slab.
sure. Yeah. So, see, these are the, new regime under what are the allowances to be foregone. See, one is allowances, the other one is exemptions and deductions. These are the, basically it is exemptions and deductions are the two broad concepts where the benefits have to be foregone by an salaried employee. Under exemptions, these are the exemptions which need to be foregone. One is the leave travel concession. Like we already discussed that if you are making a journey for a two journeys in a block of 4 years, there is a specific exemption available for the travel fare which you incur with respect to leave travel. So that is not available under the new regime. Then the other important where we see commonly, it is quite common that a newcomer or at least a person who is in the age of 30 years, definitely he is going to have this HRA, house rent allowance. So this exemption is also not available under the new regime. So under certain circumstances, the income of the minor child may need to be clubbed with the parent. And if you are clubbing that, there is an exemption available to the extent of 1,500 rupees. If you are going for new regime, that 1,500 rupees exemption is also not available. And also the most of allowances prescribed under 1014, like just to throw an example, the children education allowance, children hostel allowance, these allowances are also not exempt under the new regime. So then comes the deductions. What kind of deductions an employee has to forego? One is, of course, the most attractive deduction for a salaried employee, which is quite common again, is the standard deduction of 50,000 rupees. So that deduction is not available under new regime. Then deduction for entertainment allowance, which is applicable only in case of government employees, and that to the extent of 5,000 rupees. So that is also not available. Then profession tax, like through payroll, the companies will be deducting 200 rupees per month as a profession tax. And for the year, it will be 2,400 rupees, where that deduction is also not available. And also another significant benefit, I would say, is the interest on housing loan in the case of self-occupied property. If the property is been occupied by the employee and if he is paying any interest on the housing loan, that interest deduction, under the old regime, the deduction can be claimed to the extent of 2 lakh rupees, which is again not available under the new regime. Then comes the family pension. If any of your family member is receiving family pension, there is a specific deduction of 15,000 rupees or 1/3 of the pension, whichever is lower under the old regime. That deduction is also not available. So entire family pension will be taxable in the case of new regime. And all major deductions under Chapter 6A, you name it, like life insurance premium paid, housing loan, principal repayment, tuition fee, PPF, medical insurance premiums. So all these are not applicable. And one interesting thing to be noted here is even employee contributions to National Pension System, NPS is what we call it as popularly known as, even deduction towards NPS contribution is also not applicable, only employee contribution. Then if you are making any donations to charitable institutions like donations under section 80G, even that is not available. So, all chapter 6A deductions, I would say most of it is not available. Like medical insurance is also not available. Donations we already discussed. Then there are certain deductions like specific ailments or for disability, 80DD, 80DDB, 80U. Even those deductions are not available under new tax regime.
Okay, so I think Mr. Amaranath, that gives us a great insight on what tax regime to choose, because as much as we find new tax regime very interesting because of the lower tax rate and slabs, but then we are exempted from these facilities, I would like to say, are not available under that. So thank you so much for this. So now I think we'll have one polling question for our audiences today. Can we launch that, please? Okay, so I hope the question is available on all screens.
Yes, yes,
Is
it is
in
available. It is
Okay,
available.
thank you. So is exemption for food coupons available under the new regime? Yes, no, not no.
Yeah.
Um,
So there is a specific exemption available for food provided to the employees. The rules say that up to 50 rupees per meal is what is exempted. And many companies, since they do not provide the meal, they provide a meal voucher or a meal coupon. And nowadays, the trend is to provide a meal card where the card will get loaded with a specific amount every month. So the question is whether the food coupons or the meal cards provided to the employees, is that exempt under the new regime? So let us see what this is. I mean, intentionally, I have not included this under the my deductions to be foregone. So let us. I just want to hear from the audience whether they are aware of this
yeah,
or not.
sure. Can we have? I hope everybody has put in their options. If it's yes, no, not known, can we have the result, please?
Okay, yes,
Okay, so
24%, no 54%, not known 22%. Very good. I think majority, yes. So 54% have answered that the exemption is not available. So that's the correct answer. Food coupon exemption is also not available under the new regime. So, I mean, if you are doing any manual calculations of new regime, old regime, please take care of this. I mean, if they are using Great HR tool, I think definitely the tool will take care of it. But if they are doing manual computations, they need to be aware of this, because this food coupons does not fall under any allowances, neither under deductions. It falls under perquisite. It's a benefit given to the employee. So when we generally we say that okay, deductions are not available, exemptions are also not available. But this is the only exception to the benefit where this benefit is also not available. So this requires a special attention if you have this benefit to your employees when it comes to new and old regimes.
okay. I hope everybody has, or because as we saw in our polls, 54% were already aware. So I'm sure everybody's keeping tabs. So we'll move on to the next question. So as you said that there are a lot of these integrity to this new regime, and there's a lot of questions, doubts arising that what one should choose. So it would be better if you can explain us with an example of the new tax regime, and I think that would help us get more insights on this.
Sure, definitely. Okay. See here, I have come up with a simulation. So situation 1 and situation 2. So the first column under situation 1 is old regime, second column is new regime. Similarly, in the situation 2 as well. The gross salary of the employee is, let us discuss the old regime first. So the
Sure.
gross salary is 27.57 lakhs. He has HRA exemption. He has submitted the bills and he qualifies for that to the extent of 2 lakhs. Similarly, LTA exemption, he has 1 lakh. Car expense reimbursement. See, he has a car maintenance allowance in his structure. So company is providing car expense reimbursement to the extent of 24,000 per annum. So he has submitted the bills for that. He has availed that car expense reimbursement as well. So food coupons, 24,000 is the deduction again available, 2,000 rupees per month. So he has availed that. Then deductions, he has a self-occupied property interest on housing loan, 2 lakhs, ATC deduction complete to the maximum extent of 1,50,000. Apart from that, the employee, as an employee, he himself is contributing to national pension system, which is 50,000. Then medical insurance of 25,000. So after considering all these exemptions and deductions, his taxable income is coming to 19.84 lakhs. Same salary under new regime, the person having all these exemptions and deductions will not get none of these exemptions and deductions under the new regime. So unless, 27.5 lakhs remains as 27.5 lakhs, 27.57 lakhs. So the total tax liability under the old regime comes to 4,07,994. Under new regime, it comes to 5,64,894. So there is a difference of around more than 1.5 lakhs under old regime and new regime. Then same situation, the salary remains same, but the employee is not living in his own house, so he does not qualify for HRA. He does not have any travels within India and does not qualify for LTA, but he has a car reimbursement of 24,000, food coupons of 24,000, and then he has contributed to ATC. Only PF is contributing, which is 50,000. He lives in his own house where there's no housing loan interest also. So, most of the exemptions and deductions he doesn't have, he does not qualify at all. So in that case, what happens under old regime, the salary remains same. The old regime gives you the tax liability of 6.4 lakhs, whereas new regime 5.64 lakhs. Again, there is a difference of almost 1.5 lakhs. So can we say that, see, when you look at these simulations, what you can understand is, so if the person does not qualify for any exemptions and deductions, can we straight away conclude that, okay, new regime is more beneficial?
Better. Yes.
Better, yeah, that, yes, you can, but however, that cannot be applied as a thumb rule in all the cases, because there could be some other deductions, like there could be a standard deduction which is applicable, where I have not considered in this computation, but whereas standard deduction, you need not maintain any receipts or anything, everyone is eligible. So profession tax, for that matter, that is also a deduction which is available across the board. So each and every unique, every computation is a unique computation. So it is advisable that you, compute the tax liability under both the regimes and then take a conscious call whether it is beneficial or not.
Sure. I think with that example, I think it's more clearer now. As you said that, if you're not applicable for any exemptions and deductions, then new regime could be better. But then it depends on, individual to individual. So thank you for that. Now as you said that, we saw that many deductions and exemptions are to be foregone with this new regime. But are there any specific deductions allowed in this new regime?
Yes, there are certain deductions which are allowed under this new regime. One major deduction which is not withdrawn under new regime is the employer contribution to NPS, National Pension System. So which is capped at 10% of the basic salary. So if your employer is providing this benefit, this deduction is available both under the new regime as well as under the old regime. Very important deduction, significant benefits, but this is not being withdrawn by the government under new regime. This is basically to encourage more and more people to come forward and invest in national pension system. That could be one of the reasons, more like an incentivizing employees for investing in NPS. Then there are a couple of special allowance which are exempted even though it is a new regime. One is transport allowance provided to a Divyang employee who is a specially abled person for commuting between residence and office. This is 3,600 rupees per month is what the rule says. And if the person is availing this deduction and if you have it in your salary structure, then this is available as a deduction. And please ensure that this is deduction is available only to a Divyang employee, not for all employees. Then conveyance allowance granted to meet the expenses of official nature. So you may have an office staff who helps you in, filing some of the things or commuting from one place to another place for office work. And if any conveyance allowance which is given to that employee is completely exempt under new regime as well. Then allowance granted to meet the cost of travel on tour or on transfer. This is again comes under section 1014 special allowance. Basically, if you are giving a living allowance or a per diem, if the person moves from one place to another place for official work, even then that is tax exempt. Like, say for example, the head office is in Bangalore, but a branch is in Delhi. So the employee may have to go to Delhi for a week or so as a visit to the branch and look into the business of that branch. So in that case, company may give you that we will pay you, 2,000 rupees per day as an allowance to take care of your living expenses, to take care of your lodging, boarding or whatever. So under old regime, that is exempt to the extent it is actually spent. And under the new regime as well, that is exempt. That exemption is not withdrawn. And the same applies even in the case of international travels. We call it as per diem. So if a person is moving from one country to another country for official purpose, he may receive a daily allowance in the form of per diem. So that per diem is also exempt under the new regime. Then comes the rebate under section 87A. This is basically a rebate which is available if the total income is less than 5 lakh rupees. 12,000 to the extent of 12,500, the rebate can be claimed. This is also available both under old and new regimes. So up to 5 lakhs, or if the income is less than 5 lakhs total income, then whether it is a new regime or old regime, it doesn't matter anyway. It doesn't matter. So there is no separate set of rules there. Since 87A relief is available, rebate is available. So, it's available under both the schemes. So, there's no separate computations involved there.
Okay, okay. We discussed about the specific deductions which are available under new regime. Can you tell us if there's any conditions attached to avail the new regime? Like, something that makes you applicable maybe, or that has to be mandatory to, avail the new regime?
Yeah, see, there are a couple of conditions, not many conditions, but couple of conditions. One of the very important condition which everyone should be aware of is that in order to avail the new regime benefit, you should have filed the return within the due date for filing it. The first due date for filing the return is 31st July. For the financial 21-22, we recently passed that 31st July. So in order to avail the new regime benefit, you should have elected this new regime before 31st July of the subsequent year. So if you are unable to do it by 31st July, if you are filing a belated return, then you are not eligible to avail this new regime benefit. So definitely when a salaried employee goes for new regime, when it is more beneficial for him when it compares to old tax regime. So in order to bring in the discipline with respect to compliance, and also with an intent to with an intention of generating revenue to the government, they are discouraging availing this new regime benefit for belated returns. So please ensure that whether it is new regime or old regime, unless you compute, you will not get to know. But when will you compute? When you are filing the return, then only you will see whether new regime is beneficial or old regime is beneficial, and accordingly you will choose in the return. So it is very important that you file the return within the due date in order to avail this benefit. The other thing is no specific form is prescribed for salaried employees. They have to make this election in the tax return itself. You might have observed that if you are filing return in the portal, there is a separate box and you have to elect there. You have to check that you are going for the new regime. So if it is non-salaried employee, like if a person is having business or profession, they have to file a separate form called Form 10IE. So anyway, that is not part of our today's discussion, so we are not getting into it. However, for salaried employees, there is no such separate form. It is so in the tax return itself, you can specify that. The third important point which you need to be aware of is that this needs to be made every year, this election. So that, the whatever you have chosen this year is valid only for that year, and it won't get carried over to the next year. So it is important that every year you compute the taxes under both the regimes, whichever is more beneficial, you accordingly go for it.
Okay, okay. As we have, I think we have discussed pretty much everything related to, the differences between old tax regime and new tax regime. I wanted to understand if there's any implications on TDS by employers about the new tax regime.
Yes, there are a couple of implications when it comes to TDS aspect. There is a separate circular given by the Central Board of Direct Taxes to handle the TDS aspects of this new and old regimes. There were a lot of representations from the industry saying that there is no clarity with respect to TDS. How would, as an employer, I know that which regime the employee is going for? And how would I compute the taxes for TDS purposes for a monthly deduction? Say suppose if the new regime is more beneficial to the employee, but if I don't apply that and I compute the taxes under the old regime, then definitely there will be a higher tax deduction, where again the employee it is a hardship for him to again file the return and claim the refund in the tax return. There will be a time lag of around 1 to 1.5 year to get the refund from April to next to July and then getting the refund. So there were a lot of representation, and finally the government came out with a circular. The circular says that the employer may give an option to the employees to choose the old regime or the new regime for TDS purposes as well. This has to be at the beginning of the year. So in the month of April, before the payroll closure of April month, the employer may give an option. It's not compulsory. It reads as though it is not compulsory. But when you look at the practical aspects and also from employee perspective, it makes more sense to give them that option and roll out that option. And when the employee chooses which option, that you need to apply and deduct the taxes accordingly. However, there is another aspect. I mean, as I said, it is employer may give that. So say suppose sometimes what happens, employer will roll out that, the option, but the employee doesn't choose. He won't respond to the employer's question. So in that case, the circular also clarifies that if that is the situation, employer has to presume that the employee has opted for old regime and accordingly compute the taxes and deduct the TDS every month on month. So if there is a specific response from the employee, accordingly you go ahead and do whether it is old regime or new regime based on the response given by the employee. If employee has not responded, then you must presume that he is going for old regime and accordingly TDS has to be done. And once the TDS has been elected by the employee for TDS purposes, that cannot be changed during the year. However, he can change the same at the time of filing the return, but with respect to employer, he will not be able to change that. Employer will consistently apply the same thing for the entire year from the day he opted for it.
Okay. So I think it's advisable to say that, we should inform our employer if we are going for new tax regime so that they can update the TDS accordingly.
Yes, that's correct.
Okay. So we have another polling question coming up. Can we have the question on our screen, please? Okay. So are you giving the choice to employees to change the regime chosen by them during the year? If it's yes, no, not no.
Yes, this is again what I'm asking is if you have, as a part of your payroll process, are you giving the choice for the employees? So, say suppose they have already chosen that new regime they want to, but during the year, can they change that? As an employer, are you giving that option to them to change the option chosen by them, by the employee?
Would request the audience to put in their, option, please, and we'll have the result then. Okay, can we have the result displayed on our screens, please?
Okay. Are you giving the choice to employees to change the regime? Regime is what I'm asking. It's not that you may be giving the choice, but what I'm asking is to change the regime chosen by them during the year. So yes, 56%, no 40%, not no 4%. Okay. See, as I already mentioned, the circular specifically prohibits the employer to give an option to change the regime which is already chosen by them. So majority of you are answered that you are giving the option to change the regime chosen by them. So, practically also when you look into it, this may pose a lot of challenges to the employer as well. In between the year, again, they have to go and make those changes. Again, after 3 months, if he changes, again, go back to your payroll systems and make those corrections to the regimes is a very tedious process and tedious task as well. And also circular directly prohibits giving that option to the employee. So what I see is, if you are giving that option to change, please relook at your payroll systems, payroll processes and change that. So you can roll out that option once. Once the employee chooses, again, do not give the option for him to change the regimes.
Okay. Okay. So I think everybody has noted, taken note of that. So we'll move on to the next question. So is there any impact on set off and carryover of losses in the new tax regime? If you can
Yeah.
shed light on that.
Yes, it's a very interesting question. So we already saw that in case of self-occupied property, housing loan interest to the extent of 2 lakhs, whatever that benefit is available, that's not available under the new regime. But what happens to the losses I have? So say suppose you have a let out property, two let out properties, and one property is having 10 lakhs of income, the other property is having 12 lakhs of loss. Could be because of the housing loan interest what I am paying for, or whatever may be the reason. So the net loss is 2 lakhs. So can I offset this loss with the other head of income? Under old regime, yes, you can offset the 2 lakhs up to 2 lakhs of house property loss. You can offset with other heads of income. Could be salary, could be other sources, could be your business income. However, when it comes to new regime, that offset of house property loss is not available. Other losses are available. You may have a capital loss. Of course, there are no restrictions. You can go ahead and offset with that. But house property loss is not allowed to be offset with any other head of income. So what happens? I mean, in the normal circumstances under the old regime, for whatever reason, if I'm not able to offset, I can carry over the losses for future years. For a period of 8 years, I can carry over and offset with future income. But can I carry over that loss under the new regime? No, you cannot carry over as well. So what happens to the 2 lakhs loss is completely dies. So it expires on the same year. So when you look at the incomes and compute whether new tax regime is beneficial or old regime is beneficial, this aspect you may not look into it. House property loss, okay, not allowed. But what happens to that? I mean, you cannot carry over as well. That means that loss is lost forever. So that is another important aspect which you need to look into. When the net benefit is only rupees 10,000, just an example which I'm giving under the old and new regime, but you have to forego 2 lakhs of loss, which you can offset with other income in the next year. Maybe paying 10,000 more and taking the offset of the 2 lakhs in the next year may be more beneficial than saving this 10,000 in the current year. So it is really a conscious call which you need to take while choosing these regimes.
Okay, okay. So I think you have already mentioned, the challenges or how we are simplifying with why we came up with new tax regime and what one should choose in different circumstances. But if you can please conclude for us, what are the pros and cons of the new tax regime?
Okay. Yeah, I think this is a summary kind of a thing of the entire discussion. So pros, definitely the relaxed tax rates, slab rates are relaxed. So as we already discussed, net benefit is 75,000 rupees if you go for the new regime. That is one of the pros. The other benefit of new regime is both employer and employee is free from complete hassle of maintaining the supporting documents, and also, like, I mean, year-end process is not that easy when it comes to employer perspective. Many companies, they deploy many people from other roles into this to take care of this verification of the proof and then allowing those deductions, exemptions to clarify the questions of employees, all these things. That complete hassles is not there under new regime. And another aspect is, when it comes to pros, yeah, these are the two major advantages which I see when it comes to new tax regime. Under the cons, I mean, the consequences are also not very insignificant. They are very significant. As we discussed, many allowances and exemptions have to be foregone. Then even the losses from house property you cannot offset with other income. Carryover option is also not available. So then another important aspect is the new regime. If you want to go for it, you have to file the return within the due date. The belated return is not eligible for claiming new tax regime. So these are the, positives and negatives of this new tax regime.
Thank you, Mr. Amaranath, for that. I think we have gotten great insights on this topic today, the impact of both these tax regimes and what one should choose. So we are just closing the first part of this discussion today, and we move on to the questions that we have already gotten from the audiences. But before that, we will be doing one more poll. So can we have the poll, please? Okay, which tax regime is more beneficial in case of salaried employees? So I think we have already concluded it, but
Yes, yes,
let's
yes.
hear it from our audiences. What do they think?
Exactly, exactly. Let's see whether we have made the impact or not.
Definitely. Okay, I hope everybody has put in their choices. Can we have the result, please?
Old regime, new regime. So depends on case to case. So anyway, majority 51% have answered it depends on case to case analysis. Yes, that's correct. Even though he is a salaried employee, do not, it's there is no thumb rule or a straightforward rule that whether the old regime or new regime is beneficial. You have to analyze each and every case by case analysis, and then decide which is more beneficial.
Definitely. So thank you once again, Mr. Amaranath. I think I'm certain that the audience has gathered a lot of information on this topic today. And we already have a lot of questions waiting for us. So let's dive in. First question is, if telephone, vehicle maintenance certifications, etc., are eligible in the new tax regime, is what I think the question.
So yeah,
would-
FBP. So I assume that the vehicle maintenance or a telephone reimbursement which the company is giving, generally that is exempt, considering that those are more for a business expenses. When I'm working from home, definitely I need a telephone reimbursement or a internet connection. So whatever allowance I'm getting, that is exempt. So this exemption is available both under the old and new tax regime.
Okay, okay. I think I'm certain that answers the question. The next question is, gift card rupees 5K will get tax exemption or not under this regime?
New regime. Yes, gift up to the up. I mean, gift. See what the law says is gift which is less than 5,000 rupees is what is exempt. But if you are giving exactly 5,000, that is taxable. Whether it is old regime or new regime, it doesn't matter. So coming to your question, if you are providing gifts worth less than 5,000 rupees during the year, that exemption is available even in the case of new tax regime.
Okay, okay. The next question is quite interesting. It says that does an individual have a choice of choosing, or can a company put a mandate for a regime to save their energy?
Yeah, as we already discussed, see, for TDS purposes, if the individual have not responded, yes, you can presume that it is the old regime he is choosing for. And also giving the choice of that is again a choice to the employer. I mean, if the employer says that the number of employees are very small, so I'll just go ahead with one regime, he may be able to do that. But considering the practical aspects and the difficulties faced by the employees, I would urge that the company as an employer should give that choice to the employees. Only if they have not responded, then go ahead and go ahead with the old regime.
Okay, I completely agree that the employees should have the freedom to choose which regime they
Yes.
want to opt for.
Yes.
Okay. So the next question is, can we claim deduction of rupees 30,000, which includes 25,000 medical insurance plus 5,000 as medical bills under Section 80D?
No, this deduction is not available under the new regime.
Okay, okay. So I think that's a very straightforward answer. It's not available under new regime. So how to save if the gross salary of a person is more than 35 lakhs? I think saving on the tax, it's what the question meant.
Yes, yes. I mean, this is very generic question. Without understanding the facts and the
Mhm.
basic structure of the salary, this question cannot be answered. So maybe that
Mhm.
person can reach out to me separately so that
Sure.
I will understand their facts better, and then I can give a precise answer for that.
Definitely. I hope whoever has put that question, we already have Mr. Amaranath's email ID and phone number available. You can reach out to him directly, and I'm sure he'll be happy to help you out. So the next question is, in the old regime, medical allowance up to what limit is allowed towards deduction?
So even under old regime, medical allowance is no more a deduction available because from 2019 onwards, they are done away with the medical allowance deduction and transport allowance deduction. Instead of that, the law introduced standard deduction. So whether it is old regime or new regime, medical allowance deduction is not available now.
Okay, okay. So the next question is, I think it's a little situational. They've asked many employers are using other tax benefits like fuel expenses and drivers' wages for personal cars used allegedly for official personal purposes. Under Section 17, read with Rule 3. Further, internet expenses are being reimbursed outside the CTC. Big Four audit firms have advised that the employee can claim these expenses and still opt for a new tax regime. Please clarify.
Yes, that is correct. See, the rule 3 is what is being mentioned here. It actually gives the option of giving these expense reimbursement both for official purpose as well as personal usage. It does not restrict only for official purpose. So in that way, the reimbursement towards official as well as personal expenses is very much within the corners of the law and as per the tax rules. And coming to your question, whether these deductions are available even under the new regime, yes, these deductions are very much available under the new regime. So, another thing is internet expenses. Yes, see, internet expenses is something, to a certain extent, it is a gray area, I would say. There is no clarity. The law says telephone reimbursement is what is exempt. But when it comes to internet, the rationale behind that is when I am using internet means I am working from home, and then there is a consumption of internet. Then without internet, I may not be feasible to work from home. So there is a rationale and a good logic for exempting the internet expenses as well. So in my view as well, I mean, both these exemptions are very much legal and available in the new regime as well.
Okay, okay. So the next question, I think you've already answered this, but if can an employee change either if he wants to or if he or she wants to opt for old regime or new tax regime in the middle of the year, if they can change it?
Yeah, I mean, I understand that this is more from a TDS perspective. So that change is not available. Employer should not give that change as per the circular. However, they can change it. Say, suppose for TDS purpose, they might have submitted as a new regime. But later on, at the time of filing the return, they realize that the old regime is more beneficial. Of course, they can change it at the time of return filing. There's no mandate that once your employer has considered a specific regime for payroll purposes or a Form 16 purposes, the same has to be continued even for tax return. There's no such rule. So employee is free to change that at the time of filing the tax return.
Okay, okay. The next question is, I'm sure it's mandatory. So if it's mandatory that a company, needs to deduct the tax,
Yes,
is what
it
the
is.
question is.
Yes, it is mandatory provided he comes under the taxable limit. The employee comes under the taxable limit.
Okay. If the next question is, if reimbursement of petrol expenses taxable and how much is the amount for that?
Actually, the question should have been drafted the other way. I mean, is it exempt to what extent is is more relevant? So, I mean, there are two sets of vehicles here. Petrol expenses for a cars having a CC engine of 1.6 liters, it is 1,800 rupees per month. If it is more than 1.6 cc, then it is 2,400 rupees per month is what is exempt. So basically 1.6 and more than 1.6, you can say that the sedan and above are generally more than 1.6. So 2,400 rupees is exempt. And for other small cars, it is 1,800 rupees is what is exempt. The balance is taxable.
Okay, okay. Moving on to the next question. It's what about perquisites that employer provides in the new regime?
Yeah, as we already mentioned, the only perquisite, which is an exception, is the food coupons. Only food coupon deduction or exemption is not available. All other perquisite valuation or exemptions or whatever you call it as, whatever is applicable for old regime, the same thing is applicable for new regime as well.
Okay. There's a question regarding some doubt in the example that you showed about the impact of the old and new tax regime on the two situations that you showed to us. If you can please take us through that again. I think they want to, they have some doubt there. So
Sure.
that would help.
So this is what the simulation. So
Yes.
here, what I have under new regime, see the car expense reimbursement is available under the new regime as well. But in my example, the employee has not submitted the bills. He has not availed that deduction. That could be the confusion. And food coupons also, he has not opted for it. Generally, food coupons are part of the basket of allowances. So if the employee has not opted for it, the same thing will be paid as a special allowance to him. So in the second, under the new regime, I have presumed that the employee has not opted for it. Just to give you a sense of the impact as to which is more beneficial and how to determine that is what these assumptions I have made. So when you look at the first situation, the difference is 1.5 lakhs. In the second situation also, you can see the same difference. But in under situation 1, old regime is more beneficial, and situation 2, new regime is beneficial.
Okay.
So, I mean, this is very high level. I mean, the assumptions and the actual scenarios may have much more complex situations. So, just to give you a flavor as to how this works is what I have projected here.
Yeah. Thank you. Thank you so much, Mr. Amaranath, for the clarification. We'll move on to the next question. They're asking if they can claim both HRA and housing loan interest, and if yes, what are the documents and what is the condition on that?
See, both HRA and housing loan interest can be claimed as a deduction provided the condition is satisfied. What is that condition is? If the person is not able to occupy the house owing to the purposes of employment, then you can allow him to claim both HRA and housing loan. So what does that mean exactly means? See, my home is in South Bangalore, but my employer, my company is somewhere 20 kilometers distance away from my home. So what I will do is, in order to easily access my office, I will shift my residence to a place nearby my office and I start paying rent to it. In those cases, yes, you can definitely allow them both HRA and housing loan interest.
Okay.
So what documents, generally whatever you collect for HRA and housing loan, the same documents are applicable here as well.
Okay. Okay. So the next question is, what if my employer is an NRI? What document is to be given in place of PAN, as he or she has no PAN to show?
No, sorry, can you come again?
Yeah. So they're asking, what if their employer is an NRI, and when they're filing their returns, what are the document that can be given in place of PAN if he has no PAN?
Oh, if he does not have a PAN, okay, NRI doesn't have a PAN. PAN is mandatory if the rental payment exceeds 1 lakh in a year. So, I mean, there is no substitute for it. So you must get the PAN. I mean, you may have to apply for the PAN and give a PAN to you so that you can give that to the employer in order to claim the exemption.
Okay.
Yeah.
Moving on to the next questions. There are a lot of questions that have come in.
I think one
can we
question
claim?
is,
Yeah.
One question is rupees 50 per meal restrict to 1 meal per day or 2 meals. See, 50 rupees per meal is what it says, but the rule does not say how many meals can be given in a day. So that's the practical call where an employer has to take. Say, for example, I have seen a company where the working hours are from morning 7 to 4. In that kind of a situation, obviously 2 meals are justified. One for breakfast, one for lunch. Similarly, if the shift is like from 11:30 to 8:30 or 12:30 to 10:30 in the night, again 2 meals are justified, lunch and dinner. But if you are working from a normal standard hours like 9:30 to 6 p.m. kind of a thing, there are 2 meals is not justified. Only 1 meal is justified. So there is no straight cut answer for this. So depending on facts and circumstances of the case, this has to be decided.
Okay. Moving on to the next question. Can medical bills be submitted for exemption? If yes, under which section under old regime? Would you like me to?
be submitted?
Is submitted.
Okay, can medical bills be submitted for exemption? If yes, under which section? No, medical bills can be submitted in case of senior citizens. Say, for example, either it could be employee, could be a senior citizen, which is very rare cases because retirement is generally 60. So this generally we see in case of parents. Under section 80D, the parents for whom, for the parents who are not covered under the medical insurance, there is a deduction available to the extent of 50,000 rupees for medical expenses. So in case the employee has senior citizens as parents, and if they are incurring medical expenses without having a coverage under the insurance, then those are deductible. So that can be submitted for exemption. If yes, under which section? It is 80D. But under new regime, that deduction is not available.
Okay. So one person is asking for a salary under 10 lakhs, which regime would be suitable? Which one should we go for?
Yeah, this we already discussed. So, I mean, the number doesn't matter, your salary number. So, whatever situation may be, please calculate the tax under both the regimes and then take a call as to which is more beneficial. There's no thumb rule.
Okay, okay. Moving on to the next question. It says, after selling family land or house, if we get money partially, then is it taxable? If yes, then under which section we will have to file the return under?
After selling family land or house, if we get money, yes, I mean, generally, if there is any gain made out of that transaction, that is taxable. Basically, this is a capital gain. If yes, then which section? I mean, there's no specific section as such, but the income is taxable under the head capital gains. So there are separate categories of capital gains. So you have to go for land and building category and then disclose all the particulars and then file the tax return.
Noted. Moving on to the next question. Can we get relaxation on EMI interest paid for home loan, which is awaiting for the possession?
Under new regime, no, there cannot be. Even under the old regime, if you have not taken the possession, then there is no deduction available. However, whatever interest you have paid prior to the getting the possession, that can be taken 20% each for 5 years. That is again available only under old regime, not under new regime.
Okay. There's another question. It's very interesting. When an employee exits the organization in mid of the year, is it mandate for an employer to collect the IT declaration proof?
See, there is no mandate. I mean, nowhere it is said that you have to collect the IT proof, but it is advisable that as an employer, you collect the IT proof and then deduct the taxes. Because what the law says is if there is a shortage in the TDS deduction or there is a default in the TDS deduction, employer will be responsible for that. So he has to pay it from his sources, his own money. So in order to avoid those kind of situation, collect the proof, I mean, and then determine the taxes, and then accordingly you deduct the taxes for an employee who is exiting.
Okay, it's not mandatory, but then it's advisable that one employer should do so.
Yes, yes, that's right.
Okay. Next question is, employer NPS contributions will be tax-free under the new regime. Is this a good investment or a good return?
Okay, see, I'm not an investment advisor, I'm a tax advisor. So this question needs to be posed to an investment advisor. Yes.
Okay, okay. So I think there's still a lot of questions. We can take a few more, and then because it's already 5, we'll wrap the session. Sure. And if there's any more questions from anybody, you can all reach out to us. Also to Mr. Amaranath, his email ID, phone number is available, and also to us on our email ID, and we'll be happy to help you out. And as I said before, the session is currently being recorded. So if you have missed out on anything, we will share the recording with you and you can go through it. So we'll take a few more questions. For work from home, what are exemptions for fuel reimbursement? It's work from home.
See, under work from home criteria, how can you justify a fuel reimbursement deduction? Because the fuel reimbursement is basically you're giving that to facilitate the commutation between home and office. Generally, that is the presumption. So unless the employees are marketing people who they have their responsibilities will be to go and meet the clients and sell the products, there it may be advisable. But purely a work from home criteria, providing fuel bills reimbursement is practically it is a risky position.
Okay, okay. The next question is, what is eligible deduction limit for interest on education loan?
Interest on education loan is deductible for 5 years basically, and once the student completes the education, there's no specific limit as such. The interest paid is deductible. For whatever interest you have paid for 5 years is what is deductible.
Okay, okay. So I think this will be a last question we'll take. In case the company is providing 300 rupees per day for 22 days food coupons, Paytm or Sodexo, and an amount of rupees 4,400 has been added back to taxable income as perquisite. The same is applicable to old and new tax regime. Please clarify.
The company is providing 300 rupees per day for 22 days food coupons, Paytm or Sodexo. So, and an amount of has been added back to taxable income as perquisite. The same is applicable to old and new. Please clarify. See, under the new regime, see, if you are providing 300 rupees per day for 22 days, it comes to 6,600, right? If I'm not wrong. But you are adding back only 4,400, assuming that 2,000, another 2,400 is actually one meal cost per day. So under new regime, you should have added back all entire 6,600 and not only 4,400. Old regime, it may be fine to add 4,400. Yes.
So we have now come to the end of this session, and I'm sure this session was full of great insights on old and new tax regimes, the impact, the pros and cons, the challenges with old tax regime, the simplification that we have brought up with the new tax regime, and which one should one choose. So thank you again, Mr. Amaranath, for such a knowledgeable session full of insights. And thanks to all the attendees as well who participated, who sent in a lot of questions. And I'm sure this was one engaging session today. And if you have any more questions, if you have any doubts, you can reach out to us. We'll be happy to help you out. We also have a community which is called Great Tribe. You can sign up there, and there we also conduct these live sessions and all these buzzing topics related to HR or employer, anything which concerns an employer or employer. You will get great discussions there as well. So you can sign in, and we'll just close the session now. Thank you once again. The recording, as I said, will be shared. And for any queries, you can reach out to Mr. Amaranath as well, and to me as well on rakhigotham@greathip.com. Thank you so much again.
Thank you. Thank you.
Thank you so much. Thank you. Thanks again, everybody who came and attended the session today with us. We will see you in our upcoming Parichay webinar. Thank you so much.